Ladies and gentlemen, welcome back to another video. I'm your host, TheDividendAristocrat, and in today's video, we're going to be taking a look at UnitedHealth stock. It's dipped down pretty significantly this past week, and I want to cover whether or not I think it's a buy right now, and if I'm going to be adding to my existing position. Now in this video, we'll take a look at the recent dip in stock price that they've had, why the price dipped so significantly. We'll also take a look at my individual position in UnitedHealth and whether or not I'm adding more to the position. And we'll cover some stats like its dividend income, its revenue growth, and its free cash flow growth over time. If you guys do appreciate the transparency and enjoy this type of content, consider subscribing to the channel. I post weekly investing content. As a reminder, this is not financial advice and I'm just merely sharing my opinions on this channel. Now, as always, let's just quickly take a look at the portfolio dashboard. So right now you can see that I invested $48,246 into the portfolio. And this year alone, I invested $13,275. That brings my portfolio value up to $56,125 or $7,800 unrealized gain, or a total return of 16.33%. Now in total, this portfolio has earned me $1,635 with dividend income, and I've reinvested that all back into the holdings that paid it out. Going forward, I am projected to earn $950 of dividend income, and this year alone, I've already earned $216, which puts me ahead of 2022, as well as, of course, 2021 and 2020. Now, my current cash position sits at about $9,000 right now. I think maybe just a little bit lower than that, and I currently have 22 different holdings. One of them, of course, is UnitedHealth, which we'll be covering today. Now, even with UnitedHealth's steep decline, you can see my portfolio is only down about 0.5%. That's because it's pretty well diversified among a bunch of different stocks, which are listed right here. So as you can see right here, on Thursday, UnitedHealth was down 22.38%. Keep in mind the markets were closed on Friday for Good Friday, so we don't know how it's going to perform yet until Monday comes around, and we'll see how it opens up then. That being said, being down over 20%, even over 10% for such a consistent company like UnitedHealth Group, and such a large company as well. We can see here the market cap is $415 billion. This is absolutely absurd. It's not very common at all, and this could present a discounted buying opportunities for those interested. Hopping into the 5-day graph, we can see how steep of a decline this was. It was trading at almost $600 just last week, and then after that, it dropped now all the way down to about $450 per share, which is a very significant drop. Now in the past month, it's been a bit more all over the place. It was down as low as $500, then it climbed up to about $600 and has since dropped. And if we go into the 6-month picture, we can see that the stock price has been going up and down pretty consistently for a while now, where it hit $460 per share in February of this year. In terms of the 1-year performance, it has not been great. It's down 10% now because of the recent drop. And we can see here the 52-week high was at $630, but it is far from that right now. Taking a look at its peak around November of 2024 to the current stock price, it's down almost 30%. Now in terms of the 5-year performance, it's not too bad, but it's definitely underperforming the S&P 500 currently. But if we look at its max performance over time, it has been absolutely absurd. Now the big question is, will this company continue to grow at these rates that it has had in the past, or is it going to start slowing down as the company matures and has less room for revenue growth? Now just to quickly hit on why the stock price tanked so badly, it was basically their earnings report. They recently released their first quarter earnings for 2025, and the company adjusted their earnings down pretty significantly for the new year. UnitedHealth did mention specifically that their costs, especially for their Medicare Advantage plans, was far above what they expected for 2025, and because of that, they adjusted their 2025 adjusted profit per share to $26 to $26.50 per share compared to the prior forecast of $29.50 to $30 per share, and this is a pretty significant change. Now, because of this change, investors are pricing in this lowered earnings per share or this lower profit for the company, and so the stock price seeing such a significant dip makes a lot of sense after these earnings. Now, I was definitely not expecting this for the company. I thought they would have some headwinds, but because of other reasons, for example, class action lawsuits and of course federal government probes. Now, this is definitely something that I'll have to consider when deciding if I'm going to continue holding this company or if I'm going to add more into my existing position. Now, speaking of my existing position, we can see right here all the shares that I own for UnitedHealth. So it's pretty expensive on a per share basis. So I actually only own 5 shares, and with dividend reinvestment, I have 5.098 shares. Now, on average, I paid $483.78, and for me, I thought that was a good price at the time. It had dipped down pretty significantly, I believe, in early 2024, and I decided to scoop up some shares then. Now, since then, there has been a lot that has happened relating to UnitedHealth, and I'm not going to get into every single detail in this video, but you guys do know what I'm referencing. Now, the current share price at $4.54 is below my average price paid, so for the first time in a while, I'm actually negative on this position, down 4.29%. Now, I do want to clarify that personally, I don't actually mind if my positions are negative for a while. If I do like the position and I believe in them long term, it gives me an opportunity to buy more shares at a lower price and lower down my cost basis over time. Now, of course, it's not good practice just to continue buying shares just because the price is going down. It's important to pay attention to what the company is doing and what its outlook looks like for the future. In terms of dividends, I have earned $49.91, and we'll take a deeper look at that in a little bit. And my yearly dividend going forward per share is $8.40, or an annual payout of $42.82, which I'll be reinvesting back into UnitedHealth Group. The current yield sits at 1.85%, and my yield on cost is lower because the stock price did drop, so it's at 1.74%. In terms of allocation, UnitedHealth Group does make up 4.1% of my portfolio currently, but depending on the day, this fluctuates a lot. For example, before earnings on Wednesday, it was about 5.4% of my portfolio value, but since it tanked so badly, it's now 4% of my allocation. So going into my order history section, I can clear all the holdings right here, and I can type in UnitedHealth and select it by itself, and you'll see here all the purchases I've ever made. So on the 18th of January, you can see I ordered my first UnitedHealth shares. I bought 2 shares at $500 per share, and that was a limit order that I had set for actually quite some time, and it did pull through at $1,000 for the total order. Then a couple of days later, I bought one more share at $488.80, and this is pretty tough on me because it's a lot of money to be putting down on one share each time. It's almost $500 per share, and that's a pretty big portion of my portfolio, especially back then. Now that same day, it kept dipping down, so I decided to buy one more share, $480.1, and we can see here that a couple months later, I bought one more share at $450. Now, in terms of dividends, I like to track it now using my dividend calendar, aside from my order history tab, of course, and it populates right here so you can see how it grew over time. So I was getting $7.52 in March, then $10.53 in June, $10.58 in August, and $10.62 in December. And from June onwards, the reason it was growing is because of reinvesting those dividends and, of course, any sort of dividend growth that they had. Now, taking a look at 2025, the dividend calendar is actually smaller because I own less dividend paying stocks now. I've sold a lot of them, which you guys can check out on my channel. But you can see right here that I got 1066 on March, and over time it's going to continue growing as I reinvest those dividends. Now, before I give you guys my verdict on whether or not I'm going to be buying more UnitedHealth Group or at what price I'm going to be planning on buying more of those shares, let's take a look at some of their financial metrics on my dashboard right here. So the first thing we can see here is their growth over time. This is the past 10 years, and overall it's been pretty strong, and the same can be seen for most of their metrics. The revenue per share has increased pretty significantly, and that's because their premiums are basically a subscription-based service. Now, their medical expenses are much more variable from year to year, but their premium itself is just a subscription-based service where you keep paying them on a weekly, bi-weekly, or monthly basis in order to receive the insurance. Even when it comes to medical costs, a lot of UnitedHealth's health plans are actually high deductible health plans, meaning that the customer tends to pay a lot out of pocket before the insurance steps in and helps out. The earnings per share has accelerated very quickly, especially if you bought it here in 2013, the stock. The reason for the big stock price bump is because of how quickly it accelerated from 2013 to 2017. The same can be seen for their free cash flow per share, and even though they have smaller margins than a lot of other businesses, as you can see right here, margins are around 6%, they actually produce an absurd amount of revenue, and that's why they're able to return so much to the shareholders in the form of dividends and stock buybacks. So speaking of share buybacks, you can see here the shares outstanding have decreased pretty quickly over time, and I'm sure they're going to continue putting money towards share buybacks, and dividend per share has actually increased very quickly over time. I believe the last increase was about 12 or 13%, and in previous years they've gone over 14% on some of their dividend increases. Now, as somebody who prefers dividend growth stocks over non-dividend paying stocks, this is a fantastic company when it comes to dividend growth, at least in the past couple of years. And we'll have to see going forward how this is affected, especially as their earnings per share starts declining from what they were expecting before. Now, even when factoring stock-based compensation and free cash flow, you can see right here the stock-based compensation is very small and it's grown pretty slowly over time, so nothing significant. Free cash flow is still growing very well. Now, in terms of CapEx, they do invest a lot back into the company, but compared to their free cash flow, it's such small amounts. They're producing over $20 billion in free cash flow every single year, and their capital expenditures are about $3 billion. And the last metric that I recently added from a subscriber request, which I appreciate a lot, if you guys have any more recommendations, definitely leave them down below, is the return on invested capital, and theirs has continued to grow over time at about 15% now, which is very solid. Now, currently these graphs do end in 2023, as you can see, so soon I plan on updating it so it includes 2024 as well. Now, factoring their past performance and their expected growth going forward, I think that $450 is not the worst entry price if you really want to make a position in UnitedHealth Group. If you guys do remember from earlier, I did start my position at about $500 per share, which I think was a little bit steep, but I was really itching to start a position in the company. But at $450, I might start considering adding more shares. Now realistically, I want to see this play out a little bit longer. I would love to wait for the stock price to hit $425 or even $400 per share, and if it does hit $400 per share, I'll certainly be adding more into my position. I do think that short term they will have some headwinds which will provide even more buying opportunities, but long term I think the company will do well. Management has proven themselves to be adaptable, and they've been able to continue growing their earnings even through different economic environments and different administrations. As always, that does bring us to the end of today's video. I really hope you guys enjoyed taking a look at UnitedHealth stock, my own personal position, and hearing whether or not I'm buying more of the company. If you did enjoy it, please leave a like, it helps me out a ton, and if you did make it this far into the video, comment down below whether or not you're buying more UnitedHealth shares or if you're going to be staying away during this downturn. If you haven't yet watched last week's video where I talked about 5 discounted stocks that I'm buying right now, check out this video right here. And if you guys want to see a video covering my initial buy into UnitedHealth and why I decided to buy into the company, check out this video right here. Remember, the best time to invest was 10 years ago. The second best time is today. I want to thank every single one of you guys for watching, and I will see you in the next one.